Good afternoon, everybody. Today is Friday, the 17th of January, 2014. This is Brian Shannon speaking from alphatrends.net. Let's look at these markets here. The S&P 500 lost a little bit of ground this week. The NASDAQ and the Russell were higher, as well as the semiconductors. And year to date, we are down a little bit in the S&P 500, as well as the NASDAQ. The oil's doing the worst, and gold is actually doing best. So let's take a look at those trends. The S&P 500, first up, was down 79 cents today. It's still clearly in an uptrend. We did have at the beginning of the week a little bit of a scare here that we broke some important intermediate term support, and that got us cautious. Not really a scare, but we broke some intermediate term support, and that got us cautious, but the market did recover very quickly here, and we can see that we're still in a primary uptrend. And next week what we'll want to see is probably the 183 would be best to hold, but if not, then down towards about 182. It seems as though this market's maybe just a little bit tired. I was listening to the television. They're saying that, it's a trendless market so far this year, and we're only 2.5 weeks or so into the market, so let's not read into it. If you back up, we're still clearly in a primary bull market here, so the trend is higher. We're just seeing a little bit of consolidation, and the NASDAQ, for its part, did break down as well below this 8650 level and then snapped right back. And then we saw, of course, that it took out the recent resistance at 8750, and now we're going to want to see that area hold as support early next week. You can see we came right down to the rising 5-day moving average today, and now ideally we want to see 8750 hold. If not, then we get a little bit more cautious in our intermediate term outlook. And for the Russell 2000, the key level in here would be this 115.50 down to about 115.25. That would be our band of support that we want to see hold. You can see we are holding above this rising 5-day moving average in here, and we're up at all-time highs, though, just a few points off of that. So obviously the buyers remain in control of all these markets here. The semiconductors were down 1.2% today, but for the week, of course, we did have a good rally as we held this 41.50 level as support and then broke this little resistance. So ideally we would want to see this level hold as support for next week. The semiconductors have been very choppy in here. Obviously today's move was brought about because of a bad reaction to earnings in Intel, but overall the semiconductors are in still a strong bull market here, with 41.50 being the key level of support. That's also where we have that rising 50-day moving average. The financials were up slightly this week as well, and is that right, or were we down a little bit? Let's take another look. The financials for the week were down about 0.5%. We're still holding on to slight gains for the year. We had a little bit of a shakeout in this market as well. The key level in here to hold next week will be first we would like to see 21.85 hold, but the bigger, more important level, I think, is about 21.65. If we continue to hold above that, then this market remains innocent till proven guilty, and any trades that you're taking in these indexes on the short side should be just for day trades. There were some good day trade opportunities in the indexes this week, but to hold on for more than a day trade just doesn't make sense when we have primary trend still higher. Shares of Apple lost ground this week, and it's interesting that we were looking for a purchase of the stock above this level here, but obviously not to chase the gap. And I had warned readers that we don't want to chase it. We want to see where it settles in. So we've been holding off from buying Apple, and rightfully so. The 5-day moving average had the potential to hold a support at this gap closure, but it didn't hold. That's why, again, we don't look at it and say this prior resistance will become support. It's the potential level of support, and obviously it didn't occur. There was no slowdown when it got to that 547 level here today. In fact, the selling accelerated, and the stock closed right down near the low. So Apple is going to be a near-term avoid for a little bit as the stock kind of settles down a little bit. We talked about Twitter last week. We were talking about how Twitter was holding above the volume-weighted average price for since the IPO and the 50% retracement. We've seen a nice bounce in shares of Twitter off of that this week, and it's been a little bit choppy with these gaps, which makes it difficult to trade in a weak close on Thursday, but it was a nice week for the stock. And let me just go back to the S&P 500 for a moment, because I wanted to talk about the volume weighted average price year to date. So I just had to change the screen. But here's the volume weighted average price year to date in the S&P 500. So it's at 183.35, and we came down to that and bounced from it today, this afternoon. So perhaps that's going to be an important level. We'll continue to track that volume weighted average price year to date. And actually, when you look at it for the NASDAQ, we are actually well above it. The Russell 2000 well above that volume weighted average price year to date. Semiconductors are right on it as well also with this prior resistance. So it's going to be an important level to monitor, and the financials are below that volume weighted average price. Anyways, back to the market. We had a little bit of volatility. That is, some of the bigger stocks were lower, and this, I think Lululemon, for example, is a good example rather of why you don't buy these stocks, these momentum stocks, when they break, because this first gap lower, it just turned sideways, trapped some people over here, and then this past week was another bad week for it. We saw shares of Nu Skin blow up. GNRC is another what's been a strong momentum name, and then of course Best Buy broke down real hard and closed at the lows for the week. Trying to buy these stocks is really just a bad idea, and I would suggest that you don't do that. Money management, risk management is the key. In fact, in a stock like XONE, we bought this one in Alpha Trends right here on Monday and got stopped out that same afternoon right here. And look at that big avoidance of loss that we sidestepped. We actually got out with a gain. So breaking out is one thing. Playing a breakout. First of all, we didn't buy the actual breakout. We preempted it by getting in front of it by about 50 cents, and that helped us get out with a profit. But breaking out is what you're looking for. But if it doesn't hold those gains, you've got to move to the sidelines. Defense is in risk management is job number one, and that's what I constantly emphasize in Alpha Trends. So if you haven't taken a free trial, go ahead and sign up for 7 days, and let me know what you think. Have a great long weekend, and I'll talk to you next week. Thanks.